It is way less fun to report on mornings like this. Tesla has dropped the prices on a tiny fraction of the vehicles it makes in China. I mean, a tiny fraction. But there is way more to the China story than that. And there's obviously continued anxiety about the US economy in general. And guess what? You have a perfect storm. So what happens next? This is Randy Kirk. Even on days when you don't like what I have to say, I still wish that you would like the content, hopefully, because it's useful and valuable to you in making decisions and just thinking in general about the overall market. I am not, of course, any kind of an advisor. I have no certification, and I wouldn't want you to make any decisions 100% on what I'm talking about. But, it might have something to do with how you see things in general. Always do your own homework. Scott Walter will be on later today. You don't want to miss that one. So hit notify, which requires hitting subscribe first, and then join Patreon. Okay. So nobody's talking about anything else this morning as Tesla takes another about 3.5% hit in the early going, and the market is just barely down this morning with the bond market up. Does a price drop on Model 3s to clear inventory prior to the launch of the refresh really deserve a 3.5% hit this morning? Does a minor adjustment on one version of the Model Y in China that only accounts for at maximum 18% of the total Model Y sales out of Shanghai warrant this big sell-off? When I say maximum 18%, why? Because the Model Y doesn't just sell, the Shanghai Model Y doesn't just sell in China, it sells in Australia and South Korea and go down the list all over Southeast Asia. So it's less than 18% of the total cars that are being manufactured in Shanghai that were affected by this price drop. Okay, let's take a look at what's going on. Like I said, I promised you all the reasons why. So here we go. Number one, the market is skittish right now, and particularly with regard to China and its failing economy. Another domino is falling right now in the Chinese real estate debacle. There's a major investment company, kind of like our REIT, that is falling apart this morning. And as noted earlier on this channel, the real estate crash is hurting the wealth of the very folks who would buy a Tesla. So it may not actually impact demand, but it has the appearance of doing so. So this may not affect Apple as much because why? Because Apples are $1,000. But when you're talking about buying a $50,000 Model Y or a $60,000 Model Y, this could be the very folks who that would impact. I'm not saying it will impact them. Maybe Tesla is just seeing a little bit of that going on. Reporting out of China this morning from Tesla showroom says that this small decrease from yesterday has already got people flying into the showrooms and placing orders. Other BEV makers are also cutting prices. This gives an additional appearance of a round three in the price cutting wars, so-called. I think it's unlikely that Tesla is cutting in response to or directly because of Geely's cuts on their popular Seeker, but that's the appearance. Therefore, the market is worried that this is just the beginning of the cuts and that it may grow in China and spread to other markets. I would say that Geely might be doing exactly the same thing that Tesla is doing. They might be reducing it based on a little bit of a drawback by that very cohort that I just mentioned. I would say, I guess you could call it the upper middle class in China that might be affected by the real estate craziness. Okay, then you have the outside way that Tesla moves in the market. Now think about this for a second. This is really important to think about. Last year, Tesla moved from, it went up to 410 at its very high, and then it dropped 75% from that 410 all the way to 101. The market didn't go down by 75%. The NASDAQ, the S&P, the Dow, none of those moved down by 75%. So then the Tesla stock turned around and moved up 200% to get to $300 a share, or almost within pennies of $300. The market didn't go up by 200%, not the NASDAQ, not the S&P, not the Dow. No, it went up to no. So now we're having a slight sell-off in the overall market, and the market is not dipped by 20%. That would be a full-on bear. But it's not surprising to see Tesla drop that much. It just swings way more than the overall market on these trends. So that's part of what's going on this morning. So the market is soft this morning too, but up slightly. I mean, I'm sorry, it was up slightly in the pre-market, but now it's down again. We have continued to have these recent issues in the spotlight, foremost that being the supply of Treasury bonds coming on the market. As I mentioned yesterday in my report last night, the market is not happy with what's happening with bonds. The Treasury has to put a lot more bonds on the market over the next weeks and months because of the deficit. And where are they going to go? They already had a hard time selling the ones that went on the market in the 30 years last Thursday. So and that means a record amount of money is going into these bonds, and we already have a record amount sitting in cash, in bonds, money markets, and actual cash. So where will the money come from? Will it come from equities? That'd be one place. It's going to come out of the stock market. Will the Federal Reserve swoop in and buy some of the excess by printing money? Well, that's going to contribute to inflation. It has to come from somewhere. Maybe rates will go up even more in the process, but real interest rates are already out of whack. And that is just going to crush the economy more so than the Fed even wants it to be crushed. So 10-year yields are back up this morning, but the 2 years are up even more, widening the inversion. Of course, higher interest rates are not good for Tesla, especially the short terms. So all of this is affecting Tesla this morning. Let's talk about inflation. You know my position. There is not a chance that inflation will stall or go up unless oil goes to 100, 110. It's not because it goes to 85 or 87 or 90. No. One commentator added wheat to the story this morning because wheat is reacting to the Ukraine problems. But so far, neither one of these is high enough to do any serious damage to the inflation picture, though both are raising eyebrows. Trueflation spiked this morning because of almost entirely because of single-family home prices rising. Of course, I've been talking about this for months. There is no inventory, and we're in the height of buying season. So, of course, single-family dwellings for purchase are going up. This is not surprising, but it will not affect CPI because why? Because CPI doesn't look at the price of single-family housing. They look at the quote-unquote the value of that single-family housing as a rental property by asking people what they think their house would rent for. It's a crazy way to figure out something, but that's not going to figure into CPI. So, but now that very same problem of dwellings, I spent a lot of time on that yesterday, talking about the fact that rents are actually falling. There's now talk that rents could fall into deflation in the first quarter of next year based on supply that's coming onto the market. So this morning, is it a blip for Tesla? Is it a blip for the market? Has the last 2 weeks been a blip for the market, a blip for Tesla? It is too soon to tell. The U.S. deficit, combined with high interest rates, is not a small issue. We can grow our way out of it, but the Fed isn't helping on that front. We can increase interest rates, but that doesn't help the economy. The Fed can print money and kick the can down the road, but that's inflationary. Oh, the government could cut expenses in an election year. We're running up to being in the election season. The season has really started. That's not going to happen. So the market is currently going the way it's going. Tesla's down and filling the gap to 235. Let's take a look. Of course, when the market turns, it will turn. If there's more price cuts, we could go back down to 217. Of course, if there's no more price cuts, then in a couple of days, this will all be a memory. And of course, a year from now, or 5 years from now, all of it will be a memory, because in the next 90 days, Tesla's catalysts are going to start to play in, as I mentioned yesterday in my video there, look right up there for the card. And in 5 years, we'll be counting our gains and nobody will care. So right now, Tesla, 235, there you go. I think it will probably bounce off 235 because there's going to be a lot of folks wanting to buy at that level. So it'll probably bounce off that level, but you know what? It might end the day at around 235. That would not be a shock. Let's take a look at the rest of the marketplace right now. You've got the Dow. Oh no, the Dow is down almost 100. The NASDAQ is down 30. S&P is down 9. So, you know, the whole market now is responding in this way. And then let's take a look back over at the rest of the items here. We have got the crypto still in the low 29s. We've got the dollar. Well, we got the ruble slumping now, but the dollar has been moving up slightly because people are expecting real interest rates to be higher. Gold is now down strongly back to 1937. That is down big. Silver and copper. So overall, the commodities, except for wheat, are down. Oil is steady as China worries about supply cuts. So now but oil is still almost at 83, so I don't count that as being down. And then we've got bonds, which are up at 4.2. Look for bonds. If bonds go past 4.25, that's a worrying point. And then as mentioned earlier, the 2-month is not too bad, but the 2-year is up much more strongly. It's up 0.068 compared to the 10-year, only up 0.041, widening the yield. I'm sorry, the inversion. Okay, yeah, as I mentioned, not thrilled to be having to bring you all this negative news this morning, but watch my video yesterday on the 9 catalysts in 90 days. And I'm still saying that we're going to be looking at the stock market, at Tesla being 350 on November 10. Make sure that you do take a look at my video later today with Scott Walter, and the continuing Asia story will be probably on tomorrow with Larrgy Goldberg. That's all I've got for. Please like, subscribe, notify, and then of course join Patreon. I believe that it's worth it to you, and it will also help support the channel. Until later today, it has been great talking to you.